as you know that you are already working on Oracle 12i. That
Yes.
may be the functional module of Oracle.
Yeah. It was a
Yes.
functional module. AR,
Yeah. Yeah.
AP, GL, financial
Oh
module.
yes.
Yes.
Yes. So so see, Oracle is a competitor of SAP.
Yeah.
SAP, yes. So Oracle has got different modules in which it is not a module wise. It is different ERPs in Oracle, like JD Edwards, Barn, iFlex, PeopleSoft, Ranko Marshall. These are different
Mhm.
other ERPs which Oracle has bought it, and each ERP is functioning in this own way, which is supporting a separate domain. Okay, like for HR you have PeopleSoft, for finance you have Oracle 11i, and JD Edwards, Barn, iFlex. These are for sales,
Mhm.
procurement, logistics, and all. But SAP is one and only ERP that is supporting all the domains, all the functional modules at once. And SAP is the ERP which is having the integration functionality, wherein you can integrate one module with the other, wherein this functionality Oracle does not support.
Mhm.
So if you are functioning with finance, you have to buy Oracle 11i. If you have logistics, you have to buy Ramco Marshall, JD Edwards.
Yeah.
These are, yes. But in SAP, you are having the integration functionality. That is why SAP is having an edge with compared to the other ERPs in the market. Okay.
Mhm.
Now, if you see what is FI, finance is SAP supports FI, which handles the day-to-day operations, the financial activities, the day-to-day operations in the company, like your the GL posting, the transaction posting, the bank posting, okay, accounts receivable, accounts payable, okay, asset
Mhm.
management.
Mhm.
Okay, so SAP helps you to configure your business process in such a way that you'll be able to process your business transactions and uh, your day-to-day accounts payable, the payment you're making to vendors, the receivables which you're taking from the customers. It helps you to manage in such a way that and at the end of the month you are in the complete picture that this is what the cash I had at the beginning of the month, and this is what you have spent, and this is what you have received. Okay, and to denote these transactions, SAP also provides you special purpose ledger. Okay, special purpose ledger is like you'll be having a special account indicator which you can use it for uh, say for suppose down payment. Okay, what is down payment? Down payment is something a kind of small amount of token amount which you receive
Yeah. I
beforehand.
am aware of it. Yeah. Mhm.
Yeah. So this functionality is also supported by SAP, wherein
Okay.
you can take a small portion as a token amount, and you can start the production. And once your production is completed, you can take the final amount from the customer, and then you can make the delivery of the goods to the customer, and you can close your accounts. Okay, then you are having controlling, wherein you are having other modules which SAP is supporting, like your product costing, like budgeting, okay, and profitability analysis also. Okay, now
Mhm.
another module in SAP is asset management. Okay, if you may be seeing that in a company there are lots and lots of assets, like machinery is there, AC is there, furniture is there, computers there. These are all the assets of the company, which SAP gives you a functionality wherein you can manage your assets based on book depreciation, based US GAAP, based on IFRS also. You can do the book depreciation of the asset based on uh, the accounting procedure which you're following. Say for suppose in book depreciation you're following a process to depreciate the asset by 10%. Okay, but according to US GAAP, you're depreciating the asset maybe by 15%. IFRS you're depreciating the asset maybe by 5%. So based on that, you can assign different depreciation keys to the asset, and you can continue your depreciation, and you can maintain your books of accounts according to that.
I have a question.
Yes.
Can you again tell me in brief what is that CON module?
Yeah, sure. CO, CO controlling, that is CO and controlling, CONTROLING.
Okay.
Okay. Yeah. So controlling is another module of FICO only, wherein your primary cost elements of FI, like direct material, direct labor, flows from FI to CO, wherein you are able to track the cost of production to the
Okay. So we
final
can
product.
somehow call it. So we can somehow call it like cost accounting.
Yes. Yes.
Cost
Yes.
accounting sort of things
Yes.
can be done in module.
Yes. Yes. Cost accounting, like say
Variable
you're having.
variance
Yes.
analysis or something.
Yes, you are having this as cost accounting only. Okay. Suppose you are a manufacturing company, and you're manufacturing uh, a, a computer. Okay. So what are components which is involved in manufacturing a computer will be accounted in this particular module, like the labor cost, machinery cost, electricity cost. These will be these will be captured in this particular module, and finally when you are coming to a finished product, you can see that this was your raw material and your overheads which is being consumed during the production of this particular finished good. That is the computer. Okay.
Okay.
Yeah. And you can also see that what is your profitability margin in a sales order, or a production of any commodity. You can take out a profit margin also from this. Okay. Now, now if you see GL reporting, SAP has given you a functionality wherein you can do your reporting based on local reporting and external reporting also, it supports. You can maintain parallel ledgers. You can maintain parallel ledgers wherein you can give your reporting in the local accounting structure also, and you can do the reporting according to US GAAP also. Okay, you can prepare your balance sheet, you can prepare your income statement and profit and loss account also based uh, uh, on your according to US GAAP, according to IFRS, and you can prepare according to local reporting standards also, according to Indian accounting standards also. So you can maintain multiple ledgers in SAP. Okay. Now, like in today's scenario, uh, all the companies are going for IFRS standard, which and SAP has provided you the functionality wherein you can do the reporting based on IFRS also. So this
Right. That is must. Hmm.
yeah, yeah, you can maintain vertical balance sheet wherein you will be having liabilities on top, and then followed by assets, and then you can prepare your financial statement according to that, and you can proceed with your reporting purpose. Okay. Okay. Now external accounting is something which you are producing your balance sheet, your profit and loss statement to your stakeholders who are investing in your company. So SAP provides you the end-to-end solution how you can produce a balance sheet in a in a vertical balance sheet wherein you can show your entire assets and your liabilities, so that your reporting is crystal clear and you are getting a complete picture that this is the performance of the company. Okay. Now if you see why external reporting is so important. External reporting is important
Because
for
stakeholders, yeah, because the
yeah
stakeholders want to know that what is the
yes
current financial position of the company. Yeah.
yeah. So the external reporting is important because they will be interested in knowing that what is the position of your company, how much liquidity you are having, so that they'll be interested in investing in your company. And same way, banks will also be giving you a loan. They'll be giving you the float, so that you can carry on your operations for your day-to-day purpose. Then external auditors is also very important, wherein where they'll be seeing your quality standards, what you're maintaining, and how you are presenting your balance sheet, your profit and loss account, and all. And it is also important. It is also important for the tax authorities also, like how much tax you're paying, how much tax you're receiving from your customers. Like you in Indian accounting, you might have seen Form 16 challans and all. So in the
Yeah,
same
yeah.
way,
I'm a chartered accountant. I understand this whole
yeah,
thing.
yeah. Yeah, yeah. Okay, okay. Now the components of controlling. Okay, so controlling offers you different modules in which you are able to see, you are able to track the cost, that what is the cost which is incurred in your day-to-day operations. Okay, so first we'll come into cost centers. Okay, what is
Hmm.
cost center?
Centers
Cost
are
center.
Cost centers are the unit of an organization which do
Yeah,
not generate any revenue.
yeah,
Like HR department, we can call it as a cost center. Admin department, we
yes,
can call them as a cost center. They support, but they do not
yeah,
generate any direct revenue.
yeah, yeah. So you can say that cost center is a department in the organization, or it can be a work center in the organization also. Like
Mhm.
say for suppose you're having an assembly line, you're having a production unit, you're having machinery, production activity is going on. Okay. So these are also a cost center for the company. Okay,
Mhm.
wherever you are able to post, wherever you are able to post a GL, wherever you're able to post a GL, you see that this is the cost which is going to this particular department. Okay,
Right, right, right.
now, yeah, now say a very simple example, like in your home, you're ha you are you are having a budget, you are having a budget of 10,000 rupees. Okay, so you are allocating this 10,000 in different areas. Like in 10,000 I have to keep uh, 2,000 rupees for my transport, 2,000 for my fooding, some for your pocket expenses, some for your petrol allowance. Like this, you are allocating different budget for your different areas. Okay. At the end of the month, you are seeing that how much cost you have incurred in these areas. Suppose you have 2,000 you have kept for petrol, but you see that you consumed only 1,000 rupees in this month. So 1,000 is your saving. Now if you see in your fooding expenses, suppose you kept 2,000, but you're seeing at the end of the month that you have kept you have exceeded the budget. So you've got 3,000. So in the same way, companies also allocate budget for different cost centers. At the
Right.
end of the month, they will compare actual plan and variance. Okay,
Right.
this was my actual, which I had kept for the budget. This was my plan. I kept a plan for 1 lakh rupees, but my actuals is only 90,000. So 10,000 will go into the profit and loss account, which will finally go into the cash reserves of the company. Okay. Now, if you see, the other module is internal orders. Internal orders is an is an order which is created within the company to capture the cost of production activity at different levels in the company. Suppose I am installing a machine. It is a big
Mhm.
machine. I imported it from say US. I have imported that machine, and when I'm installing that machine for my production activities, which I think that once this machine gets installed in the after 4 months or 6 months, okay, after 6 months when this machine will start functioning in a proper way, I will be able to capture the cost of this machine. Okay, from the day I have imported it till the time it comes into production, the companies capture the cost of day to day. cost which is incurred on that machine, and it will uh, it will capitalize the order when the machine starts functioning
Right.
in the proper way after 6 months. So you are having different costs like engineers visit, electrical charges, maintenance,
Yeah.
and transport. All these costs will be captured under internal order. And finally, when the machine is installed, it is into production, we will capitalize the order, and then we will come to know that this was the import cost, this was other miscellaneous expenses which we have incurred on the order, and finally this is the cost of the entire machinery. Okay, this is also a very critical module in SAP. This also I will show you in detail when I'll show you the customizing in SAP. Okay,
So isn't it
now
dealt in the FA module?
I'm
This
sorry.
is this is isn't this thing capitalization of the expenses till the
Yes.
time an asset is becoming operational for a business?
Yeah.
Isn't it being handled in the FA module?
No, this is in FI only.
No,
Okay.
FA module like sorry, asset management module.
No, this see asset is also part of FI only.
Yeah,
Asset
you are saying whether we orders. This is a part of I think the asset management module, right?
no, this is part of see asset accounting is also a part of finance only. Okay,
Right,
and internal order is also a part of finance only. So
right.
these modules are integrated in SAP. I will show you that how you are capitalizing the order, how you are capitalizing the asset also. Okay.
Mm-hmm.
So when we go to the configuration part, I will show you everything. Okay.
Okay.
Then the other module is PS. Okay, project systems, wherein you are creating a project and you're creating a work breakdown structure under the project, and you're capturing the cost of different activities under WBS, and then finally you're capitalizing it. Okay, product costing
We
is
can
also
call it
a
as a contract accounting.
sorry.
Can we call it as a contract accounting?
Uh, yeah, you can work as you can have contract accounting also for systems. Okay, that also I will show you later when we'll get into the configuration part. Okay, and the other module is product costing, wherein you are manufacturing a product in the company, and uh, you are calculating uh, you are calculating a cost of the product. You are coming to the cost of the product that time when the when the finished good is produced, you are saying that I had incurred this much of raw materials, this much of labor, and this much was my overhead expenditure, and this is cost which I am incurring at the time of finished goods. Okay, so this module also helps you in capturing the cost of a finished product. And then activity based costing. Activity based costing is basically what activity you are performing in a work center, and how much cost you are incurring in that. Okay, profitability analysis is a module which helps you in taking out a profit margin. Okay, it helps you in taking out the profit margin from a sales order. Okay, suppose you are selling a product to a customer at say for suppose 100 rupees, and you want to see that how much cost you have incurred in this in manufacturing of the product, and how much profit you're making in selling the product. Okay, say for suppose your manufacturing cost is 40 rupees, and you're selling the product at 100 rupees. So 60 rupees is your profit margin. Okay, profit center accounting is also a module in SAP, wherein you will be seeing that how much revenue you are making from a sales order. Okay, and
Mm-hmm.
the other one is your reporting purpose. The reporting, as I told you, you can do reporting based on IFRS, US GAAP, and your Indian accounting standards also. Okay, now you come to controlling. Controlling is internal management reporting reports the cost center and other cost objects and cost elements. Okay. Now, if you know that what is cost elements is nothing but the carriers of the cost. It carries the cost from one object to the other. Okay. So if you see that if the cost is flowing from FI to a controlling object, the cost is being carried by cost element. Okay. This also I will show you when we will be doing the customizing in SAP. I will show you that how cost elements are created and how cost is flown from one object to the other. And the you cost centers I've already explained you that these are the different areas in the organization where cost is incurred and how the cost is captured at that level and how it is shown in the books of accounts. And orders are internal orders, or it can be public as well. Okay. Budget budget is budgeting is also an element wherein you are having your plan, your actuals, and your variance. Your variance component will be your, and it can be it can be a deficit or it can be a profit for you. So based on that, the companies are allocating the budget for each and every cost center. Okay. Now we'll go into internal accounting. Internal accounting is basically what you do for your internal reporting purpose, wherein your executives like your board of directors, your managers, your senior managers, they'll be able to see these reports, and they will come to know that this much expenses we have incurred internally in paying salaries, in other overhead and other expenses. Okay. Salaries, say for suppose you're paying 10,000. Overheads like electricity, furniture, fixtures, these are other overheads for the company. And the other expenses can be like your transport expenses, wages, different other expenditure. So total expenditure you've incurred, say for suppose 23,000. This can be shown to the internal management. Okay, for the internal reporting purpose. Okay. Now, if you see, this is the different.
Right.
Yeah, yeah. If you see, this is the difference between FI and finance and controlling. Finance is for legal reporting, external reporting, and reports by accounts and balance sheet and income statement. Okay. Wherein controlling is internal management reporting, reports by cost center and cost elements and cost center reports. Okay. So for external reporting, you will always use balance sheet, profit and loss. Okay. So these statements will be presented to the stakeholders, to your shareholders, wherein they will be seeing the performance of your company and they'll be investing in your company. And controlling is for internal reporting purpose, wherein you'll be allocating, you'll be seeing where the cost has been incurred and in what proportion the cost has been incurred, and what was your plan for this particular cost center, and how much you have incurred during your month. Okay. So based on that the companies will the management will take decision and they will decide a budget for each cost center. Okay. Now you can see the organization structure.
Right.
The organization structure of any company will be in this format only. Okay.
Right.
Yeah. Say any company in India like Tata, Reliance, Birla, any Indian company also, if you see, the organization structure will be in this format only. So SAP also recommends to go for this particular format. Like on top, first you will be having client, then you will be having company, then you will be having chart of accounts, company code. Either you can use business area or you can use profit center. Then you will be having credit control area and controlling area. Okay, this is very important. This is in general. If you want, you can take a note of this also. This will
Yeah.
be this will be standard, very stipulated for all the company codes. Okay. Okay. What is client? Client is the highest hierarchical level in SAP system, a complete database containing all the tables necessary for creating a fully integrated system. Okay. Master records are created at the client level. Whatever master records, whatever master data which is created in SAP, it is created at the client level, like your vendor master, customer master, GL account, all these are created at a client level. Okay, so there will be one company, there will be one client. Okay, say I'm having a Reliance company, but my Reliance company is located in different areas. One is
Mm-hmm.
in Bombay, one is in Delhi, one is in Hyderabad, one maybe in Calcutta. So it's in different location, geographic location.
Mm-hmm.
But I'll be having I'll be having one vendor which is created at the client level, and I'm using the same vendor for different locations. Same vendor is supplying raw materials to me in Bombay, in Delhi. Same supplying to me in Calcutta also. Same is supplying to me in Bangalore also. So this vendor is being maintained at a central level, at a client level, where you're you are doing your operations, you are purchasing the materials from the vendor, and you are producing your goods, and then you're selling it to the customer.
Mm-hmm.
So you can say that client is the highest level in the hierarchy in SAP system. Okay,
Mm-hmm.
the complete database is meant for your vendors, for your customers, for your materials, for your uh, GL accounts is maintained at the client level. Okay.
Mm-hmm.
Okay. Now we see company. Companies are companies will take out the financial statement at the company level. Okay. Now if you see, one Reliance company in Bombay will take out the financial statement at their level, that this much was my operations in my day-to-day activities, and at the year end this much I made profit. Okay. So that is the profit margin which that company is going to show. Okay. One company can have more than one company codes also.
Right.
Okay. See, in one Reliance company can have different Reliance companies around the globe. It can have a company in US, it can have a company in UK, it can have a company in Germany, in India, anywhere it can have. Okay. But at the end of the day, if I want to see that how much profits Reliance company has made, it will show, it will produce one financial statement, and it will show that this much is my income at the year end. Okay,
Right.
so we can see that in one balance sheet, and we can come to know that this much profits has this company has made, and this is the financial position of the company. Okay, okay. What is chart of accounts? Chart of accounts is a list of all the accounts which a company is using. Okay, in posting the transactions. So
Mm-hmm.
whatever transactions you're doing in your day-to-day activity, it is recorded in the books of accounts. Okay,
Mm-hmm.
like what is your expenditure, what is your income, how much you're paying to the vendors, how much you're receiving from the customers. So all these transactions are to be recorded in the books of accounts. Okay, so once you have recorded all these transactions in your books of accounts, you will be you will be producing this, you will be capturing this in the reports, and then you will be seeing that these are the accounts which I have done the posting, and how much expenditure is incurred, which can be captured at the account level.
Mm-hmm.
Okay, so these accounts will be showing you that how much expenditure and how much income you have made in your day-to-day activities at the end of the month. Okay, chart of accounts must be assigned to every company code. Okay, see, uh, if you are having three company codes, three company code, you can use the same chart of accounts for all the three companies. Okay. Say if you're having three Reliance company in India, so you may not need, create a different chart of accounts for three different companies. You can use the same chart. You can use same chart of accounts for all the three companies. Okay. Which will help you in a simple understanding and simple creation of your financial reports also. Now see how SAP explains this. Now see, you are having a client. The client can be a Reliance, and the other one you are having one company in US, the other one is in Germany. So you can maintain same chart of accounts for both of these companies, and you can produce your financial statement at the company code level. Okay. Okay, now you see this is the hierarchy: client, company, chart of accounts, and company code. This is how the hierarchy looks like. Okay.
Okay.
Okay. Now you see a company code has a required structure, a legally dependent entity. Okay. What is a company code? This is a company code. In SAP, every company code, every financial reporting, every hierarchy will be done under company code. Okay. So if you see, the company code is a four digit numerical or an alphanumeric character in SAP, which will be created to have your company structure. Okay. So it is a required structure, it is a legal independent entity, and is the smallest organization unit for which accounting can be carried out. The level where business transactions is processed, the level where accounts is managed, the level where legal individual and financial statements such as balance sheet and profit and loss statements are created. Okay, so this is the definition which SAP provides for a company code.
Right.
Now see, this is the organization structure, how company code is denoted in a hierarchy. Okay. Now you see, what is credit control area. Every company does the business on credit. Okay. Say you're managing customers. Okay. Every company sells goods to the customer on credit, and they maintain a credit term with the customer. Say for suppose the payment terms with the customer is marked for 60 days. Okay. So how companies maintain that? Say I'm giving you a float of 60,000 rupees. Okay. And within 60,000, you can buy as many goods from my company, and you can pay me after 3 months. Okay. You need not pay me. You need not pay me instantly. You can pay me after 3 months. Okay. So what customers do? They will take the goods from the company, and then they will pay in installments. Say my bill to that customer is for 100 rupees. So in first month he may pay me 40 rupees. In second month he may pay me 30 rupees, and rest balance amount he can pay me after that, at the end of the 90 days he can pay me like that. So all the companies, name it, any company in this in India or anywhere, they do business in credit. They are selling the goods to the customer, and then the customers are paying to them on monthly basis. So if you're having a float with the company, say for 50,000, I have given a float to a customer for 50,000, and I'm and the customer is buying goods from me for more than 50,000. Then I can say that your float is has ended. You need to pay more. Then we'll be able to supply you more goods. Okay. So based on like this, the company sets a credit limit for each and every customer. Okay. Customer can be a business partner also. Suppose you are having a very long-term customer. you are maintaining a float of 50,000 rupees with him, and he's exhausted that float. He's taken goods for more than 50,000 from you. So you can what the system will do, SAP will block the payment for the customer. Okay, you cannot sell more goods to the customer now. So it will be automatic block in the system, wherein you cannot sell more goods to the customer because his float is exhausted. Now if he pays more, if he pays you, then only the system will release the block for the customer. Okay, an organization unit or an area of responsibility created to control customers' credit limit. A company code is assigned to one or more credit control area. Multiple company codes can be assigned to one or more credit control area. Simple. Then controlling area. A controlling area, organization unit defining the company's cost and managerial accounting operations. A company code is assigned to one and only one controlling area. Okay. You may be having different company codes. Okay, but you can have only one controlling area wherein you can use it for your internal reporting purpose. Okay, fiscal year variant.
Sorry, I have a question.
Yeah.
Can you just come again to the controlling area?
Yeah. Yes,
Is
ma'am.
this something where wherever the company wanted to trace the cost, wherever the management of the company wants to be like aware of, they can create that particular thing as a controlling area? Am I able to?
See, no,
Yeah.
see, controlling area will be only one controlling area. Within it can have different company codes, but you can have only one controlling area where you can see what is the cost incurred during your internal activities. Okay, say for suppose production of raw materials, profit margin from sales. So all these things you can see in the controlling area. Okay,
Mm-hmm.
one controlling area can have multiple company codes. That doesn't matter, but you can
Can we
have only.
create controlling area, or these controlling areas are system created in SAP?
No, you have to create it.
Okay.
Okay,
Got
okay.
it.
SAP gives you
As per the choice of the top management, we will create the controlling area wherever
yes,
they wanted to be
yes,
informed.
yeah, yeah,
Fine.
yeah. So, so it's very simple. SAP will provide you the guidelines that you have to create a controlling area for this company code, and based on that you will do the configuration in SAP. Okay. Now, fiscal year variant. Okay. Now, if you see that calendar year is you are having 12 months in a year. Okay. So 12 months will be January to December, but your accounting year will be March to April.
Yeah,
Okay.
in India we are having March to April. In US we are
Yeah.
having uh, January to December. Yeah.
Exactly. Yeah. So based on that, you'll be creating a fiscal year variant. That is your calendar year. Okay. Now, if you see, there are only 12 months, but SAP gives you an added advantage by giving you 4 special posting periods. Okay. You can
Okay.
have additional 4 periods up to 12, 13, 14, 15, 16. Okay. So you can this helps you in doing, even if you close your financial year. Suppose my previous financial year was 2015. Okay, but at the end of the year, I saw that there was some discrepancy, some tax reporting, some kind of activity which I did not post in the month of March. So I can post that in the additional period. Suppose suppose I have incurred a tax, a VAT, which I did not post in the month of March. The vendor sent me the VAT invoice in the month of April, but I have to show that in the month of March only. So what I'll do, I keep the date in the month of March, and I can do the posting for it for the previous financial year. Okay. So SAP gives you this kind of feature, which no other ERP is providing you this feature. Okay. So
No,
this,
even in Oracle we have the three posting
yeah,
fields.
yeah, fine. So this is an added advantage which SAP is providing you with this,
Okay, I have
with
a
the help of
question.
this. Yeah.
Okay. Suppose I have a company in India, I have a holding company in India who is having a financial year from April to March, but I have a subsidiary company in
Yeah.
US who is having a financial year of January to December. So how
Yeah.
SAP will handle such kind of situation?
See, uh, see, in that situation, you are having multiple ledgers. Okay. In that company, you will be posting your transactions in that particular ledger. Okay. When I'll show you the configuration, I will show you that how you're going to do the posting for that company code. For India, you will be doing 0L. That ledger you will be using for your local reporting, and that ledger you will be using for your US reporting. So there are two different ledgers you can maintain, and you can do your postings. And when that year will end, and then you can close your books of accounts in that particular month. Here you can close it in this particular month when your books of accounts is closing. Okay. Okay, Sneha.
Yeah, okay. That you will show me at the time of configuration.
Yeah. I will show you all these things at the time of configuration. So I will also show you how SAP architecture works and SAP is how SAP functions. Everything I'll be showing you when we'll be doing the configuration, and I'll also help you in forwarding your resume. You are already a CA, so that is an advantage for you, and I'm sure that you will definitely get a job in SAP FICO.
I have one question.
Yeah.
Like what will be my like this training should like my training curriculum will include the uh, like you will train me on all the modules of SAP, and
Yeah.
then what will be the practical exercise we will be doing and how I will practice it? Like will I be
Yeah, sure.
provided with an instance and
Yeah, I'll be sending you the I'll be showing you the configuration and everything, how you do the configuration in SAP, and I'll be sending you the study materials also, and the institute will be providing you the test server where you can sit and practice. You can create a company code, you can create chart of accounts, and you can practice yourself. When I had done SAP 10 years back, even I had done the practice on my own. Okay, so practice makes a man perfect. I used to practice about 8 hours, 9 hours in a day, and everything I did it on my own. You know, I studied the material, I studied everything in detail, and then I configured, and I did everything on my own. And today I'm a consultant. So you also have to do it in the same way. I will show you that how you're supposed to do it in the system, and how you're going to test each and every scenario, each and every process, and everything. Based
okay,
on
so
that,
at the end of the training, am I going to have any like a case study kind of thing, complicated case study type of thing, something
yeah, you'll be getting everything. You'll be getting everything
which I
from
can call
my
it
side.
as a pilot implementation project, like a 2 to 3 days exercise or I just
Yes,
wanted to,
yes.
yeah, a
Yes,
pilot
you will
project
get.
kind of thing.
Yeah. In the customization only, I will show you how you are going to do the customization, and I'll also assign you one project that you this is the requirement. Based on that, you'll be configuring a process in system, and you can run the process flow in the system also. So everything I'll show you, everything end to end. Don't worry about that. And by the end of this course, I will I will also send you some study materials, some interview questions and everything, so that you can study those things and you can prepare yourself according to the interview. How what questions they are asking in interviews, like in IBM, Accenture, Deloitte, and everywhere. What questions they are asking, how you need to prepare for yourself, like that, and we'll groom you in proper way. Don't worry.
And what will be the if I don't know, I think you are the right person. And what will be the tenure of my course, and how frequent I'm going to have an interaction with you?
See, see that these things you can talk to the institute people. Okay.
Okay.
So uh, the way you prefer, we'll do according to that. Okay. If you're working, then maybe we can have the classes in the morning only, and then you can go ahead with your job. See, you said
Yeah,
you're working in
actually, I'm
TCS,
working
right?
for 2 to 11 shift. I'm working in a 2 to 11 shift. I'm in a US project.
Okay, okay. So fair enough. If you are working from 2 to 11, we can have morning shift. We can study. We can have the classes in the morning, and you can after that you can go ahead with your
The
job.
time, the 10 a.m. or 11 a.m. Will that be fine for you?